Hello Forex traders, welcome to another segment of my weekly Forex forecast. This week Forex forecast will be a different and an amazing one because I will be analyzing the chart from the monthly time frame down to the lower time frame where we take our trading opportunity. You know what? Forex is an amazing place where you can make huge amount of money for yourself. And before this can be possible, you need knowledge and you need to understand how this works, how you can extract, how you can make huge and tons of money for yourself in the forex market. This is what I'm here to share with you, sharing this knowledge with you and showing you how you can get this done, how you can make money and make huge amount of money for yourself in the forex market week in, week out. So all I need you to do is stick to the end of this video while I share this amazing knowledge with you. So I will be analyzing two different pairs for you, which are Gold Spot USD and Great Britain Pounds USD. These basic two pairs, they are amazing trading opportunity in it. And don't forget guys, we know the basic reason why we trade forex markets is just to make huge amount of money for ourselves, make tons of money for ourselves. Okay, so all I need you to do once again is don't forget to like, subscribe and turn on the notification bell button. By doing this basic thing, you will get an instant notification anytime we drop videos weekly on here. So not to take much of our time, which I will start with my first pair, which is the Gold Spot USD. For Gold Spot USD guys, I'm on the monthly time frame rather. On the monthly time frame, the only thing we use the monthly time frame to do is to know the direction of the market. You see, this is obvious. You can see the market is in an uptrend, which is we call the bullish trend. Okay. The next thing we do is we scale down to the weekly time frame. What do we use the weekly time frame to do? The basic thing we use the weekly time frame to do is we use the weekly time frame to map out our what's it called key levels. And how do we identify our key levels? The only thing we need to do is we use the lows and highs. Okay, these are the lows and highs. These are the lows and highs, and these are the obvious lows and highs. You see, this is high. Okay, these are the obvious lows and highs. That is what we use our weekly time frame to do. We don't take trade on the weekly and the monthly time frame. So let me scale down to the daily time frame. And on the daily time frame as well, we don't take trades on it. We only use all these time frames to what? To map out our key levels. Okay, we map out our key levels. So before I proceed, but let me quickly complete the mapping out our key levels. You see, this is another high right about here. This is another low. We call it support and resistance. Where this obvious support and resistance tends to meet, we use our horizontal line to what? To connect them. We use our horizontal line to do what? To connect them. So I'm adjusting all these levels on the what? On the daily time frame. So don't forget, there is a basic principle in everything we do. There must be a structure in place that we tends to make that particular thing works out. As we human being, our body is being built on a structure. That is the reason why it functions properly. And if you're running a business as well, for the business to thrive and be successful, the business must be built on a structure, including the building that you are living on. It's been built on a structure. Same thing as the forex market. The market definitely works with a structure. And what is the basic structure? When the market is going upward, it has a basic structure. And what is the structure for it? We have the market simply moves in lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. That is just a simple structure for it. When the market is what? In a bullish trend, or you can call it an uptrend. So once the market is coming down is coming down, we call it a bearish or what's it called? A downward trend. The market move and the basic structure the market works with is it work in an lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, that is the simple structure the market works in. Then this basic structure I will explain as I go further in this analysis the advantage of this structure. I will explain to you as I proceed. Let me scale down to the 4-hour time frame. This 4-hour time frame, we have different traders that takes trade. There are swing traders that takes trade on this 4-hour time frame. There are swing traders that takes trade on this 1-hour time frame, where the daily trader takes trade on this 30-minute time frame and what's it called 15-minute time frame. So let me go back to what the basic structure. This is why this structure works effectively. What the structures helps us to do is simple. The structure simply help us with the structure simply helps us with knowing when we are in an uptrend or a downtrend. Okay, the basic structure helps us, and this is how it helps us. You see, we said earlier, I said market moves in higher low, higher high, higher low, higher high. Once price tends to take out this higher low right about here, you see this higher low right about here, it signals to us that price is currently at what a what's it called a bearish trend. That means price has resumed a downtrend. That is a change in trend. That is what this basic structure helps us to do. If price tends to come back here and forms a pattern and bounce off, it signals to us that we are still in an uptrend, that price is not yet, signals to us that we are in a downtrend, as long as price still stay above this level. But it means as long as price tends to pierce through this higher low that we have right about here, it signals to us that we are in a downtrend, in a downtrend. So basically, immediately price takes out this level right about here, we see price tends to come down here, okay, and price tends to go back to respect this level right about here, okay. Price tends to pull back to respect this level right about here, okay. Price tends to pull back to respect this level right about here. So that is the basic use of what is it called, the higher the basic structure that market gives us. And now we are in a downtrend. We can see market is currently showing us series of lower high, lower low, lower high, lower low, lower high, lower low, and all we want to be looking for here is what's it called, a sell opportunity in a downtrend. Let me scale down to the 1-hour time frame. Okay, let me scale down to the 1-hour time frame. And on the 1-hour time frame, for us to know when we can take trade when the market is retracing, okay, this is a retracement. When the market is retracing, the only thing we need to do is bring out a tool called a Fibonacci tools. This Fibonacci tools, we tend to plot it from the what's it called, the swing eye, the lower eye, the recent lower eye, and connect it with this recent lower low. So we have a number that we tend to look out for. This 50% and 61% is a very strong level. This two level right about here is a very strong level that we tend to look out for. Okay, these two level right about here is a very strong level that we tend to look out for. And as we can see, price is currently creating a what is it called, a continuation pattern right about here, which is what's it called, the double top pattern right about here. So the only thing we need to patiently wait for price. For us to take entry on this particular trade, we need to do two things. We can see there is a level right about here, and before I continue with this level, let me scale down to the 30-minute time frame so you can see this up. You can see this very well. You see, let me increase the screen size. You see, there is a low, there is a high, support resistance. And if you need a video which can explain this more in details, I have a video here which explains this basic structure on my YouTube channel. I explain in details this basic structure in that video. So the only thing and the second thing we need to do is plot out our what's it called, a counter trend line. This is a counter trend line right about here. This is a counter trend line right about here. The use of this counter trend line is we are waiting for price to take out this counter trend line, and as you can see, price has taken out this counter trend line. And another thing we need to watch out for is, you see this level right about here. We need price to pierce through this horizontal level that we have right about here. We need price to take it out, okay, and we will expect price to come retest this level right about here, so we can find a decent trading opportunity for us to squeeze money out from the forex market. These are just the basic knowledge you need to make huge tons of money for yourself in the forex market. Let me bring out my position size calculator right about here. You see, all you need to do is, once the market give you a decent entry, just place your stop loss somewhere right about here. Your entry will be somewhere right about here. You can use here as your first take profit, okay? And once your first take profit has been taken, has been met, move all your stops to your break even. You are risk free and patiently wait for the market to make tons of money for you, okay? That is that for Gold Spot USD. So I'll be moving on to the next page, which is the Great Britain Pounds USD, and I'll break the charts down for you one after the other as well, guys. Great Britain Pounds USD. I'm on the monthly time frame, and we know what we use the monthly time frame is just to know the direction of the market. Okay, and as we can see, what is the direction of this market? We see price is going downward, which is a bearish trend, a downward movement. You see the market is going pointing downward. Now let me scale down to the weekly time frame. So on the weekly time frame, what do we do on the weekly time frame? We use the weekly time frame to to map out our key levels. And how do we map out our key levels? We look for the obvious lows and highs where they met. Okay, the obvious lows and highs. And as you can see on the chart, these are obviously lows, highs, which are support resistance. You see, this is very obvious. Okay, it is very obvious. Use your horizontal line to connect them. Okay, that is what we do on the you see, that is what we do on the weekly time frame rather. That's what we use the weekly time frame to do. That's what we use our weekly time frame for. Okay, that's what we use our weekly time frame for. And let's find another level right about here. Another low, another high, another low. Okay, I think this is another obvious one. This is a low, this is a low, this is a low right about here. Okay, this is a high right about here. You see, this is another high, 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 and lows right about here. Okay, you see, price tends to connect. So you see, this is the support resistance. We are looking for the obvious ones where they meet. Okay, this is another level right about here. That is what we use, what is it called, our weekly time frame to do, to map out our key levels, to map out our key levels. Okay, to map out our key levels. So the next thing we need to do is we scale down to the daily time frame. So what do we use the daily time frame for? We use the daily time frame to map out our minor level. On these basic time frames, we don't take trade. Okay, we don't take trade on these levels. We just use these levels as a guideline for us to map out our key level and know the direction of where price is going. Okay, we just use it for direction to know where price was going. That is what we use all these levels for. Okay, let me adjust this. Okay, this is what we use. So, and don't forget, I explained the basic market structure to us. On the uptrend, price tends to make series of higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And we understand that for us to know if we are in an uptrend or a downtrend, the price must definitely take out the higher low. And as we can see, price has done exactly that. Okay, price has done exactly that. This is the daily time frame. This is the higher low. Price has pierced through this, has taken out this higher low. Okay, so let me give you another simple example. You see, when price was forming series of higher low, higher high, higher low, higher high, and price tends to pull back. You see, as long as price did not take out this higher low right about here, it signals that we are still in an uptrend, and price tends to obey it. Okay, now compared to this level right about here, that price tends to peer through this higher low right about here, it signals to us that we are in a bearish trend. And what next did we see? Price started creating series of lower low, lower high, a downtrend. Okay, lower low, lower high. So we are expecting a lower high to be created either somewhere around here or somewhere around here. Okay, so we can continue our downtrend. So but all we need to be looking for is a sell opportunity in a downtrend. So let me scale down to the 4-hour time frame. I need to systematically break down this chart for you so you can understand how you can squeeze money out from this forex market. That is the reason why I'm showing you the template okay, the template the market works on, so you can use this basic guideline to make money from the forex market. So the next thing I want to show you is, you see, we are currently at this key level, at this major key level right about here, and price is currently creating the lower low, lower high, lower low. Okay, we are at this current level now. We are expecting a lower high, so we can continue our downtrend. And as you can see, the what is it called, moving average is far away from the price, which is showing us that we are in a strong bearish trend. But we have to be careful, okay, because we are in a key level. Okay, let me scale down to the 1 hour time frame. Okay, let me scale down to the 1 hour time frame. And the only thing we need to do on this 1 hour time frame is, for us to know when price wants to where we can take an entry, we need to introduce a tool called a Fibonacci tools. From the recent higher high, we will take it to the recent lower high. We will take it to the recent, what's it called, lower low, because we are coming, the price is coming or pointing downward. So we have to start from the upward to the downward. So as I said earlier, the powerful zone is this zone. Okay, this powerful zone is this zone, 61.8 and the 50% level retracement. So we are going to patiently wait for price to retrace back, okay, to retrace back to either this 50% level or 61 point. But I feel more comfortable with this 61.8. Okay, so I feel more comfortable. But if price tends to give us a chart pattern that you can trade as a continuation chart pattern, you can definitely work with it. So we have to wait for price to come back here. And another reasons why I said we have to wait for price is because you see this level right about here, price tends to range. Okay, price tends to range at this level, which shows us that this level is a very important level. Okay, let me delete this, what's it called, Fibonacci level right about here. You see, price came here, pull back, and price tried to take out this level, bounced off. Price tends to take it out and bounced off again before price now finally took out that level. Okay, this signals to us that is a strong level. So bringing out our fib retracement level, you will see it aligns with this particular level as well. You see, all these levels are very important level that must not be taken for granted. Okay, this level are very strong level that must not be taken for granted. So let's patiently wait for price to pull back to this level, okay, or inside this level, any of this particular level. Just look for a decent pattern to trade with. Okay, just look for a decent pattern to trade with. Yeah, okay. So that is a decent form where we can look for an entry. So if I scale down to the 30 minutes time frame for you, okay, you see price is currently making a strong approach to this level. So let's patiently wait for price to do its thing. I believe when price gets here, it will definitely align with the moving average, and it can definitely create a pattern that we can trade down here. So that is that for Great Britain pounds USD. So I want to say a big thank you to you guys for sticking this long to the end of this video. I will always come here every week to share trading opportunity for you guys every week, so you can make decent amount of money, tons amount of money for yourself, because this market is a multi-trillion dollar industry that can give you huge amount of money as long as you have the knowledge to squeeze the money out. So I will be coming here to share the knowledge with you guys every week on this my YouTube channel. Just don't forget to like, subscribe, and turn the notification bell, but so you will get a notification anytime I drop videos on here for you guys. So I will see you guys in my next segment of my weekly Forex forecast. So bye for now, guys. I will see you next week.